Good afternoon, everybody, and welcome to this week's weekly analysis session for the Elite Traders Club, Friday, the 11th of March 2016. Got the date correct this week there, John. Thank you for the reminder last week. All right, let's get underway. And first and foremost, our disclaimer: the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation, nor particular needs. So before making an investing decision based on the general advice presented in any of our presentations, please consider whether that advice is appropriate in light of your financial circumstances or seek further advice on its appropriateness. All right, as per usual, we'll go through and have a look at what the benchmark index is telling us at this point in time. We'll have a look at some specific setups and some Q&A if anyone's got any questions. The S&P ASX 200, our benchmark index, is at high risk. Didn't quite have the strength today to pull it up into that moderate risk, but it is on the improve, which is a good sign. Jeff and I did actually run an afternoon macroeconomics analysis session today, which is just being posted on our website sort of as we speak, talking about the health of the Australian economy. So that went for about 15 or 20 minutes. So some interesting listening there if you'd like to find out a little bit more about Jeff's views on the economy. He's using several key indicators and what assessments he's making, what that really makes for sort of medium to longer term investing. By all means, go and have a listen to that once the notification is sent out. All right, so given that we are in high-risk market territory, which is an improvement from, the extreme days of several weeks ago, improving through very high and now into high, it does mean that if you're trading solely in the Australian market, and assuming you're allowing yourself a 15% allowable maximum drawdown, which is pretty reasonable, it means that you need to use a 40% market risk multiplier. So applying that 40% market risk multiplier to your 15% allowable drawdown, that means you're allowed to have 6% of your capital exposed as risk at the market. Now that's really for people who are starting off in the markets. Obviously, if you've been in the markets all the way through, just continue to manage your trades as per normally using either of a trailing stop that we've talked about before, that 3 ATR based trailing stop, but I've also opened up the idea of using a slightly wider stop, and that is the 63 period moving average stop as well. And of course, when price closes below those levels, then it's time for you to exit. Just on that 63 period moving average, it does a very good job of allowing you to stay in positions for a longer period of time, obviously. And the benefit of that is that, particularly if you're dividend seeking, enabling you to collect a few dividends along the way. That 3 ATR, perhaps for those of you wanting to perhaps be a little bit more active in terms of your trade management. But either way, both very effective use of trailing stops. All right, let's go through and have a little bit of a look at what's happened on the markets this particular week. This Friday, this Monday coming up, just a reminder that the Monday session has been cancelled due to a long weekend here in Melbourne. The macroeconomics analysis session we talked a little bit about GDP today, but really more about the health of the Australian economy. So make sure you go and have a look at that as previously mentioned. Right, let's go through and have a look at beyond charts, the index here as we've got the ASX 200. The one thing that beyond charts won't quite do for us of a Friday afternoon until official settlement is just put in the last candle. You'll see the last candle there was yesterday's candle, but even today's candle not sufficiently large enough to drag us up that extra, what have we got there, about an extra 5 odd points to get up into moderate market risk territory. But nevertheless, certainly the index is moving in the right direction. We're coming up to the longer term moving average, which we're now sitting above. We've had a few sessions above that now, which is a positive sign for the market. And we really just again over this next week, I'd like to see some clear indication that the market's going to stay above this level. It's showing surprisingly good strength at the moment. And one nice aspect about it, and I'll just move this line to the side a little bit, you'll see on here the volatility. where we've had periods of low volatility, even though we've been in a broad sort of a downtrending market. But then we had these rather sharp moves down and back up, and again the volatility was increasing for a period there. That's just started to subside a little bit now at the moment, which is also a good sign as well. So not so much panic, if you like, or that aggressive movement in either direction. So that's a good thing for investors as well. In terms of new setups this week, there was only one that came through the scans this afternoon. We've still got a couple of pending trades in our watch list as we speak, so we'll go through and have a look at those. COH, Cochlear. If we just zoom out and have a look at whereabouts we've been, we're at all-time highs on this particular stock, and you'll see that for quite a long period of time. Again, it really did pretty much move sideways for a number of years, from 2007 all the way through to 2015, just ebbing and flowing between $80 and around about $45 all that time. Since then, it's in the last probably 18 months, it's broken out of that particular level. Then you'll see as I'm expanding, there we go. There's our little box that we drew in there. It's basically moved out of that sideways channel, come back and retested the bottom level of that, consolidating again, and really doing the same sort of thing all over again. So no sooner are we sort of moving out of this box into another sideways moving pattern, and now starting to move out quite strongly. So this is what Nicholas Darvas really sort of talked about in his book, how I made $1 million in the stock market, dancing his way around, I think it was Europe at the time, back in around about the 30s, I think it was. From memory, talking about sideways periods of movement, and then really just looking for clues that stocks were about to move. Now, this has clearly moved out of the box. It's come back. It's had a nice shallow retracement, looking to set up again. In terms of relative strength, well, all the relative strength bars are above zero, so that's a positive sign. Our price action, the last trough that has just been formed, is that at or above the second from last medium-term peak. There's the second from last. It's well clear of that. So the price action on this is very strong indeed. So ticking the boxes there as far as all our price action filter goes. So the structure for this particular trade, remembering on stop 0.5% above that last medium-term peak. So I'd have an on-stop order at $107.78. And we have a stop loss coming in at $98.38. So that $98.38, how do we get that? Again, I just put on the value line, put it over the last candle there, and then what I want to do at the same time is just note what our two ATRs is, which is the red line, and that's showing us that it's $9.40. So subtracting $9.40 from 107.78 gives us $98.38. And that level must also be at least 0.5% below that last medium-term trough. That last medium-term trough coming in there at 101.98. Is 98.38 more than 0.5% below that level? Yes, it is. So we defer to that level, and that makes sure that we've got plenty of breathing room should this trade trigger its entry level. So that's Cochlear. The only other ones, there weren't any other new ones from the scan this particular week. There's still one valid setup here, and this is on MBE. Given what the market's done this last week, not a really strong candle, that last one. So a little bit dubious about the strength of this particular setup, but we'll give it the benefit of the doubt for the time being. It still is in short-term uptrend. It still is ticking all the boxes in terms of our price action. And for the time being, it is still, and if I put on that value line there, it is still relative strength speaking in all three time frames, still outperforming the broader market. Would be nice to see a little bit more strength in that one though. That's still pending. Other than that, JBH, which was a setup for last week, moving along pretty nicely actually, and it was one of the things we talked about this afternoon with Jeff about the health of the economy at this point in time, retail sentiment, consumer spending, those sorts of things. And obviously With the increase in the Australian dollar recently, then companies like JB that source products from overseas, etc., the increased buying power of the Australian dollar since rallying from around about 72 cents up to now up to about 75 cents in a little over a week. So it's been quite strong, the Australian dollar there. That was about it in terms of setups that we've got in the pending list as we speak. I'll just hand it over to you guys. If you've got any setups that you'd like to have a look at, I'm certainly more than happy to do so. In terms of trailing stops in the watch list, VTG. And again, this has been a stock that Jeff's liked for a long period of time from a fundamental point of view, and it's really actually moved pretty nicely all the way along. Our little green line, our 3 ATR trailing stop, doing a nice job, giving us plenty of breathing space since triggering a few weeks ago. Since triggering last week, there really nice candle during this week, dragging that 3 ATR line upwards as well. So I'll just put on there just to give you a bit of an idea what a 63 period moving average looks like. That's the other green line there. And again, just giving it lots of space, lots of room all the way along. You will note that through here, and if I just zoom in a little bit, so just to make that a little bit clearer, that little black candle there using the 3 ATR line would have had you stopped out on that one, but still clear space using that longer 63 period moving average. If you prefer something a little bit something that doesn't quite hug the price as much as the 3 ATR. All right. In terms of trail stops, that was the only stock that trailed that stopped this particular week. There weren't any stop outs in the watch list, so that's obviously a positive sign as well. Any setups that you managed to find yourself? I know the data from Beyond Charts has only been available for a little over half an hour, so you may not have had time to run a scan. But certainly, look, if you happen to run one yourself over the course of the weekend and find anything that you'd like to have a look at or discuss, don't forget to request a coaching call or just shoot me an email, and more than happy to spend some time with you over the phone. All right, if there's nothing else, we might call a halt to it there. Let anyone who's in Victoria in particular get away for a long weekend. I will catch up with everybody into next week. Just a reminder that I will record a session on Tuesday, just before publishing the watch list. That will also take into account any new setups in the US and any trail stops and stop outs in that watch list as well. All right, folks. Well, thanks for listening. Have a good weekend, and we will catch up with you early next week. Thanks for listening. Bye for now.